Hi everybody. As you can see on my portfolio there have been a lot of changes. I have sold half of my Revolve stocks and I also bought some Alibaba and not sure, but I think from the last time that I have also bought Berkshire Hathaway stocks. I don't think I had those in the last video. So in this time I will be speaking about Berkshire Hathaway stocks and why I have sold half of my Revolve stocks. About Alibaba and Equinox Gold I will be speaking in some other video. Also, I will show you what caught my attention that I found really interesting last week in the financial world and how different participants in stock market are, let's say, cheering for different outcome. But let's start as always with performance of my portfolio. This video was made on Tuesday before market opened, so basically the results will be from Monday. I still have around 1/3 of my portfolio in cash. I did buy a lot of Alibaba stocks, but I have also sold some Revolve stocks, and my ratio basically stood at the same levels. Because of the mostly Revolve stock, about which I will be speaking soon, you can see that my returns in last 8 days skyrocketed, and now I am about 20% return this year, while S&P 500 grew only a bit, and actually difference between my return and S&P 500 grew to almost 30% this year. This is absolutely nuts. On profit chart you can see that my return actually in dollar terms grew to around, not to around, but actually to exactly $4,000. And to be honest, if somebody would told me in 2019 and asked me if I want to have 20% return this year, even without mentioning coronavirus, I would tell him yes, and not only next year, but I would sign for the end of my life to have 20% returns on my investments. So I'm really happy with this performance of my portfolio, but it is only May and we have almost 7 more months in this year, so who knows what will happen. But my main goal is to outperform S&P 500 and I think I will achieve that. So let's move on to Revolve stock, which I bought, as you could have seen, at these levels. So I have bought it around $8-9 and it went in the last several weeks from $8 to all around $16. You cannot see $16 on this chart because actually it didn't close at 16, but it went down to 15. So when markets opened, stock was trading at around $16.5, but it ended in these levels at around $14.9. And I have sold half of my shares for 16. After hours, day before I have sold them, it traded around 17. So why did I sell my Revolve stocks? Well, first of all, as you can see here, pre-COVID-19 impact, they were growing net sales at rate of 21% year on year. And in the second half of March, they've seen their sales dropping to around 20% when compared to the last year, same period. And during the conference call, management team also said that actually in some weeks, their sales were dropping at a rate of around 50%. And they were rising every single week after that. In the first week of May, their sales dropped to around 20% when compared to the last year. So they went from minus 50% year on year to minus 20% year on year in the first week of May. And to be honest, that is a little bit more than I expected, but okay, we have a really big temporary impact and I don't mind having these hiccups in the short term. Management also sounded confident that they can go through this crisis. They also lowered their salaries to $1 as long as this crisis will last. And basically all of things that they have said I really liked. I really liked how they explained their current situation, how they are coping with it, what they did and what they plan to do in the near future. So they end up being even in better position after this COVID-19 situation. But what I didn't like are numbers. That is why I sold half of my shares, but not all. So their sales in first quarter actually grew 6% year on year basis. So they had over 20% growth in first 2.5 months, and then last 2 weeks of the quarter they dropped sharply and ended up in plus about 6%. But what made me worried is that their net income or EPS almost disappeared completely. So all it took for all of their profits to disappear is 2 weeks of lower demand for their products. So compare that to the forecast of the management of the Revolve company and numbers that they have already told us that they have 20, 30 or 50% year-on-year drop in revenue. I can only imagine how big is going to be loss in second quarter when they put out their earning report. And on top of that, price of their stock almost doubled in last several weeks, and I didn't feel very relaxed having 20% almost of my portfolio in a small company which will generate huge losses next quarter. So I simply sold half of my stocks, so now I have 10% of it in my portfolio. I really like the management, I really like their approach and what their moves in this current situation. So I'm quite confident that they will do well in the long term, but in the short term I simply wanted to cut my exposure to them. I was also surprised that day after earnings and comments on the management, which I've told you that they didn't sound very good to me, I was surprised that stock actually grew 20% in after hours trading. So when markets opened the next day, price of the stocks actually grew 12% in the first minutes of trading. So I simply took advantage of that situation, which didn't have make any sense to me at that moment, and I sold half of my stocks. Now we come to the famous Berkshire Hathaway, Warren Buffett company, which I'm actually owning for the first time ever. I have never owned Berkshire Hathaway. I watched it, I tracked it, I always wanted to see what is happening there, but I have never actually bought these stocks. And as you can see on this chart, it went from around 220-30 bucks to all down the way 160 in the March, and now they are trading at around 175. So why did I buy this stock? Actually, it is quite simple to explain. Berkshire Hathaway is a, we can say, weird company. It is investing in other stocks, it has its own businesses, which it owns 100% of it, and they have a lot of cash. Here you can see that their market capitalization is $426 billion. But you cannot see here is that they own a lot of stocks. For example, at the end of 2019, they owned around $245 billion worth of some other stocks. For example, Apple, MasterCard, American Express, Coca-Cola, etc., etc. They own minor stakes there, but in the first quarter, that portfolio's value went down from 240 and some billion of dollars to around 180 billion dollars because we have huge meltdown on the markets. But we can assume that after this epic growth of the stocks in last several weeks, market value of their stock is now well above 200 billion. Let's, for the sake of this video, imagine that it is 220 billion dollars. So we can subtract those 220 billion dollars from this market capitalization value of Berkshire Hathaway, which is 246 billion, and we end up with 206 billion dollars. Now from those 206 billion dollars, we can also subtract 140 billion dollars of cash that Berkshire Hathaway has on its account and cash equivalents. Then we end up with only 66 billion dollars. And for those $66 billion, we get a lot of different businesses which are 100% owned by Berkshire Hathaway, like Geico, Gillette, See's Candies, and a lot of different businesses. I think they own more than 50 different businesses, 100%. And those businesses in 2019 generated over 20 billion US dollars of net income. Of course, this year it will be a lot less than 20 billion, but even if this year they earn only 5 billion of net income and next year 10 for 66 billion of investment, I think that is a really good return. And based off the price of Berkshire Hathaway and based off situation and level of S&P 500, I'm quite confident that my investment in Berkshire Hathaway will end up outperforming S&P 500 in next 2 or 3 years, because I have bought it on really low levels. And Berkshire Hathaway didn't follow the market in at least last several weeks when market went up for around 40%. And the last thing today, which I wanted to talk about, is how hedge fund managers are warning us that the stock prices are too high. Last we've seen is Howard Marks, who believed that market comeback has gone too far. And he's not the only one, there were several of hedge fund managers which were warning us, and to be honest, I agree with them in a lot of things that they said. But what made me laugh is this chart, taking into account thinking about this, is that average hedge fund outperformed the S&P 500 in 2018 for the first time in decade, and this year in 2020 they are lagging for I think over 10%. So S&P 500 is around 10% better than the average hedge fund. So they're crying now because they think stocks went up too fast, but I think that they will just underperform S&P 500 once again, and the only chance they have, if they wish to catch the S&P 500 performance, if it crashes again this year. And if we see March lows in S&P 500 points again, so they can buy in and win at the end of the year. But I don't think personally that we will see March lows anytime soon, and perhaps ever. So yeah, we will probably see more hedge fund managers crying at CNBC and other media how stocks are too expensive. So you should listen when they are telling you stuff like this, because they do know what they are talking about, but you should take everything they say with a grain of salt and to think about why are they telling you that. And on the other hand, we see headlines like this. Goldman Sachs quietly cuts Q3 and Q4 EPS forecasts and now values market of 2023 earnings. So as you can see, forward PE ratio of S&P 500 for 2020 and 2021 is about 20, which is historically has been really high value of S&P 500. But banks like Goldman Sachs, they are investment banks, they like stocks on all-time high, and they like very high multiples. And how do they explain it, and how do they try to reason it with investors? They forecast values of the market of 2023 earnings. I mean, we do not know how our earnings going to look like in second quarter, and Goldman Sachs is pretending that they know how it is going to look like in 2023. Again, you should always listen what they are telling you, but you should take this with even bigger grain of salt and think about why are they telling you this. Have a nice day and see you next time.